Hey, what's going on, everybody? I'd like to thank John for having me back on the channel. For those of you who tuned into the live stream, you guys know my name is Ron. I'm a friend and student of John's. I'd like to thank everyone who tuned in for that. John asked me to come back on the channel and make some content. This is an educational channel. So John, he normally gives a forecast of BTC and OMI and kind of what we're seeing in the markets and what we expect to see. So I wanted to do something a little bit different. I wanted to go back a little ways and show you guys how I've been navigating these markets the last couple months and some of my strategies and things that I look at. So I wanted to take price action back here to about March 20th or so, around that time frame when we were in this ascending triangle, which I'm sure everyone remembers very well because we were in it for quite a while. And we're just going to run the price action and talk about some of the things that I saw and how I navigate the market and some of the things that I analyze. All right, so we see here was where the market broke out of this ascending triangle. I'm sure a lot of traders took some position there. A lot of people were excited about it breaking out. On the live stream, if some of you guys might remember, I actually said I thought for a few different factors it was a little bit of a weak breakout. So I was kind of just waiting and seeing at that point. But anyone who was a breakout trader, they definitely got in the market right then. All right. So as we see price coming down and breaking out of that range, now the market has made some kind of structure. And we're not going to get into the specific like why I drew the structure that way or anything like that just now. But when you do these things, think about what it's trying to tell you. Everyone always tells you that market psychology is the biggest part of all this. And so here is a big sell zone, and people do this different ways on how you mark these zones, but we know a lot of selling went on in this zone and a lot of buying was going on down here in these zones down here. And to save time, I just went ahead and filled those in, and these are the buying zones as I see the market structure. So it's more about just thinking of support and resistance and levels. Think about, was it predominantly buying or selling that was going on in those levels and things like that. So, and also keep in mind the time frame that you're trading on and have your expectations to go accordingly with that time frame. Right now we're looking at the 4 hour. The 4 hour is actually a fairly longer time frame. It's more of like a swing trade. So don't expect the results to happen that night or the next day. I mean, sometimes you get lucky. So I want to identify the structure on the 4 hour and also on the hourly, because sometimes something that's not a valid pullback on the 4 hour could have been building some kind of structure on the 1 hour. So zoomed in here on the 1 hour, you can see I drew the market structure, and here on where the 4 hour, it doesn't create a valid pullback. When you go to a smaller time frame, you can see it did create a valid pullback on the 1 hour to make a new market structure, where this is now a new zone, the new low on the hourly. So I went ahead and drew that structure in on the 1 hour, and I put it as a buying zone because it is the recent low in the 1 hour structure, and this is how you utilize multiple time frames to see what's going on. And this is why you get stopped out of trades sometimes, because if you're just looking at the 4 hour or even the hourly, if you look in those smaller time frames that people look at, then it's building structures and buy and sell zones within that level. And lots of times that's the reason you get stopped out, because you're not thinking about those. You want to utilize at least two time frames, either the 15-minute or the 1 hour, the 1 hour and the 4 hour. Sometimes you want to go into three and get that extra look on a smaller time frame to see what's going on even more. So even though I do identify that as a buying zone on a 1 hour structure, I am keeping in mind over here it's right in the middle of what was a big selling zone for a while. So anyway, we're just going to run the playback, and this is on the hourly now, and kind of see what happens. All right, so price goes down and retests that trend. You can look at it a few ways. Retesting that trend line and coming back down in that buying zone. And here's how I try to kind of get an idea of the buying or selling momentum in the market. So what I do, guys, and this is something that I do quite a bit, is if you see these volume bars down here at the bottom of the chart. And I know we don't have time to get in a whole explanation about every little thing and stuff like that, but this is a way that a lot of traders use to judge the buying or selling momentum. So you can see on the down pulse wave, the selling volume was equal, and on the strong pulse leg up, it was a big increase. And now on the pullback, you're seeing just a small increase. So that shows that the selling volume is overtaking the buying volume is stronger than the selling volume at the time. We break it down here on the 1 hour. We see that, whether you want to look at it, if you're looking at it as testing the top of this ascending triangle or that structure within the 1 hour zone, it's the same difference. People trade different ways. So we got one little kind of a doji bounce there. Let's see the next candle. Okay. So after we've taken over that Marabusu candle and broken back over, and I see that the buy volume is stronger than the sell volume. That's where I feel comfortable to go ahead and take a position. So you guys can see here, I opened a long with a nice 3-to-1 reward to risk ratio, which is a great ratio. Every trade is not going to be 6-to-1, and you're not going to hit every trade, but that's why risk to reward ratio is like the most important thing when it comes to trading. If you watch any video with an interview with like an institutional trader or something like that, and John stresses it all the time also, it's all about the proper risk to reward ratios. That's why you don't want to just sell and buy every bottom or top as you perceive it, because that might not be the best time to get into the market. So anyway, this is a good 3-to-1 risk reward ratio, and we'll keep playing it forward and see what happens. So we got close to take profit, and then there it goes. And I know John, lots of times he says, put 3 take profits, and people have different strategies. That's definitely a good thing to do. I don't always do it. I do it a lot. In this case, I actually didn't. But there you go. You see it just did come up. And the reason where I set this take profit there a little bit, I didn't go all the way up to the top of the zone because, you got 2 touches up at the top, and then the next touches were lower. And then, so I'm figuring if there's a good chance the next touches are going to be lower. So that's why I didn't get too aggressive. It's just at the very bottom of that sell zone. Back into the 4 hour. So we're going to keep running the price action and see what happens. We just hit that good trade. We don't have to immediately rush back in anything. Let's just see what kind of structure the market shows us. All right, so we see it start to go down, a little ranging a little bit. All right, so now we get a break below that. That's probably when I want to pay attention a little more. There we go. More. Now I'm definitely paying attention. So we have high volume candles break below. Now we've broken below the low of this structure on a close, and then another strong candle. That's normally a pretty good signal. And don't forget that over here, and this is why I draw these things in, that this was a selling zone for a long time. So I do want to wait for the pullback. I don't ever like to get in during the trend. So let's see what kind of candles we see when it pulls back. Okay, so at this point I would look at the market structure that it's built. All right, guys, like I don't draw on charts as fast as John, so I went in and draw some of these things in just to save time, and I did the same thing as you guys saw me last time. I consider this a down move and a valid pullback, and then a continuation. So the selling volume in that down pulse wave right there increased fairly significantly. Then on the pullback, the buying volume barely increased, and then it was very strong on that leg down. So the selling is definitely picking up, and as I see these first few candles, the volume's falling on those. So I'm not even going to mess around here. I would go ahead and take a short, understanding that it could pull back a little bit more, but I think at this point it's more likely that the market's going to reverse and go down. Couple more reasons why I went ahead and jumped in now. You can see this pin bar candle there, that reversal. It's the volume wasn't huge on it. It was barely above average, and that's not a strong reversal. You'd want to see a strong volume that would signify a lot of buying to want to take the market up. And then this candle here, the body doesn't really match the bar, which that can be a sign of weakness as well. So I also know these are strong candles, so I'm going to put the stop loss just above the wick of that candle. But let's talk about where we want to put the take profit. So let's zoom back out here on the 4 hour, and let's take some of these things off the chart. Okay, so this is the 4 hour. So it's a pretty big time frame. So let's see where we would want to put our take profits, and we're gonna have to be patient. And these are our key buy zones. This is where we really want to buy it down here. I mean, we're seeing this momentum to the downside. It's definitely not out of the question. I mean, I know this is looking back, so we know now it did go down to these levels, but don't think with your emotions and what people are saying on Twitter about, it's not going to go down that price. You have to see what the chart's telling you. And so we have this structure form right here in this time frame. So we will highlight that as probably used as a take profit level. But if we look to the left, that really lines more up with more selling than buying, and selling and ranging that, and just like right above it. So it's not really a key buy zone, but it is a level that we could expect to at least see some resistance at, and that we will want to set a take profit level. So I'm going to set it to the low that we've seen in the recent structure on the 4 hour in this zone down here, and I would also put a take profit right here. If you want to find a place to put a third one, that's fine, if that's your style. And right here I'm only going to put 2. So that gives me a risk reward of about 4.6 to 1, which is another great trade. All right, so I would go ahead and enter after that candle, and we'll run the playback and see what happens. All right, we see the first take profit hit. And when that happens, there's also something else that I see right here that I want to look at. Okay, so what I see here is something called a candle imbalance. And I actually learned this strategy from a trader named JC Fab. He's got a YouTube channel too. He doesn't post a whole lot, but I still recommend you guys go check him out, because he's a really good, really smart trader. So I learned this from him. So it's a smart money strategy. What we want to do here is highlight this area where the wick before this candle to the place after this candle, where it's just all candle, like this one candle engulfed this whole region. And what it kind of means is that during this time that buyers and sellers, some people didn't get a chance to get in the market. And what causes this is institutions and big buys and smart money. And that's why it's called a smart money concept. So you want to highlight that area, and you want to take a Fibonacci tool and run it from that leg, from that buy down to the bottom. And so you want it to be in this range here, in the 61.8 to about 80%. So that's exactly what we're seeing. And we're going to go down into a smaller time frame and look for kind of a specific candle pattern. So first we'll go down to the 1 hour, and that's right in that zone. That's exactly what we want to see. A candle kind of like that. Sometimes the body will be more full, but in between two big sells, or if it's go the other way, two big buys. But that's the area we want to see. So JC calls it your POI zone, point of interest zone. So we want to extend that out. So let's zoom back out to the 4 hour and see what we got going on here. So this down move is definitely good volume to the downside. But for this, I'm not even too worried about that, because if I want to enter on a smart money strategy, then I want to go the direction that it's going anyway. So I'm not overly worried about the volume right here. Plus, I'm already in a short anyway going that direction. So let's see what plays out. And what I'm looking for is price to tap up into this zone with the right price action. So let's run the playback and see what happens. All right, so we get price tapping up in the zone like that on a strong candle. That's exactly what you want to see with this strategy, that it taps up in the zone, and then we get a pin bar like that. So I'm going to go ahead and enter on this smart money strategy right here. Even though I got this other trade going, this is something different that I see. And these smart money strategies, they tend to lend themselves to really high risk reward ratios. Like normally it's 5 to 6 to 1 when you spot them. So let's zoom out on the chart some and see what we might be looking at for some kind of take profit levels. So I've zoomed out pretty far here on the 4 hour, and there's a reason why. So because, like I said, these smart money strategies really do tend to very high yield very high risk to reward ratios. And when I zoom out, if you zoomed out even more, the way you could have drawn the structure on this market was that this was the real low, and they kind of run together. So on a macro scale, all of this is really kind of one level as a buying zone. And it really depends on your appetite for risk reward or whatever, but I'm going to keep that in mind when I set this. And another thing that's really good to do is keep track of the trade, what's going on, obviously, and as the market makes new structure, move your stop loss, which we'll look at as we run the playback. So where do we want to take set our take profits and stop loss at? So I'll say we want to enter right at this candle, and we'll put the stop loss right up here above that control candle over here. And the take profit, like I said, these smart money strategies, lots of times they can run a long way. So I'm gonna put it closer to the bottom of this range, like a 3 to 1 risk reward ratio. And I'll watch the trade as it goes. And sometimes you cut these off short, or sometimes you can move your stop loss up and let them run longer if you see the momentum in the market is going in your favor. So we'll run the playback and see what happens. Move the screen over. So I moved both the trade take profits and everything like that over, so we can see where we're at. And you can see on the original trade, the 4.7 almost to 1, that one actually did hit the take profits. So that hit both those. We also hit the earlier one, and we still got the smart money trade running. So let's keep running the playback and see what happens. All right, so those are big dumps on big volume, breaking through levels. Definitely makes me want to pay attention to think about possibly even moving the trade lower, to take profit. But let's watch and see what happens. Okay, so after that big dump as well, if we take the momentum in the market from the volume where this downtrend started, and this is a valid pullback right here, but even so, in both cases, the selling volume is drastically increasing. On this pullback, the buying volume drastically decreased. So it would make sense to me to not get out of this trade at this point. The next low in the market was, if we zoomed out and look. So we're already getting close to that low, which is the zone that we were targeting. And then we want to put the next low, that's all the way over here. And this level, it's the daily, but on this big a time frame, down here. So let's move, this is just for education, just to show what can happen. Let's move that down into that level, and let's see what the trade does. We'll go back in the 4 hour and keep running the playback and see how the price action unfolds. And you can see it hit that level already. So that was a 4.1 to 1 ratio. So we hit 2 trades of over 4 to 1 and another one of 3 to 1, I think, just in the last couple months with BTC. And full disclosure, in real life, I didn't actually do that smart money trade. That's something I had learned recently. But when I was making this video and doing the playback, it was something that I had seen in real time in the playback. And obviously I knew that in the future, price went down, but I try to be objective about it and just follow the strategy, and that's how it played out. And one thing, I don't know if you guys noticed, I didn't use a single indicator that whole video. I mean, just a Fibonacci tool. One time, like John says, we don't really use a lot of indicators, just price action. Some of the things I look at sometimes is I take volume into account a little bit more. I mean, John, he's just like a wizard with the chart patterns, and I'm not as good at that as he is, but I certainly look at all that too. As a matter of fact, I made I looked at a second asset and back tested it objectively. It was a non-crypto asset actually, and I was going to add that to the video as well, but it ran longer than I expected. So, but if you guys let John know, I can make a video with that as well, and he can post it at another time. But thanks a lot, John, for allowing me to come back on the channel, and I hope everybody got something out of it. Thanks a lot.